If you run a small business, you know the feeling. You glance at the bank balance, it looks fine, and then supplier bill, a quiet sales month, or a tax payment ambushes you, and the account that looked healthy is suddenly tight. Most owners just live with that hum of cash anxiety, watching the balance and hoping. But there is a level 0 to level 1 fix. You give AI your numbers once, and it builds a simple cash flow forecast that shows a shortfall before it arrives, so you act early, not late. Watching the balance and hoping. Let us name where most owners sit and call it level 0. Your only cash tool is the balance in the bank right now. It tells you about today, but nothing about the weeks ahead, so a big bill lands as a shock, a lean month ambushes you, and tax catches you out. You are flying blind, reacting only once the problem has arrived. What the cash flow forecast is, let us make this plain. A cash flow forecast is money you expect in versus money going out over the coming weeks or months. The payments you expect from customers on one side, everything leaving on the other, rent, salaries, suppliers, loans, and tax set aside. Nothing clever, in and out, over time. The running balance is the point. The real magic is the running balance. You start with today's number, add what comes in, take out what goes out, week by week, and carry the total forward. Now you can see, in advance, exactly which week your balance dips low or slips into the red, long before it happens. What to give the AI? So what do you hand the AI? 4 simple things: your opening bank balance today, your recurring money in, the payments you can reasonably expect, your recurring money out, rent, salaries, suppliers, loan repayment, and GST or tax set-asides, and any known one-offs like a big purchase. Rough numbers are fine. How AI turns your list into a forecast. Here is the lovely part. No spreadsheet, no formulas. You paste that messy list into the AI in plain words, and it does the arranging. It lays out each week, slots your money in and out, adds it up in order, and hands back a clear running balance with a plain summary. It flags the risky weeks, and it does more than tidy up. Just ask, and the AI will flag the risky weeks. It marks where your balance dips low, shows where you go negative, points to the tight month, and names the bill that tips you over. The problem gets a spotlight before it becomes a crisis. A lean month spotted early. Take a made-up owner, May, who runs a small catering business. She feeds her numbers in once, and the forecast shows March dipping into the red, because a big equipment payment lands the same month sales go quiet. Because she saw it in February, she chased 2 late invoices and pushed the equipment back a month. March passed calmly, no panic. Level 0 versus Level 1. Here is the real shift. Level 0 is watching the balance and hoping, blindsided by tight month, reacting in a scramble once the money is already short. Level 1 is a forecast weeks ahead, seeing the dip coming and acting early, chasing an invoice, delaying a purchase, or arranging a buffer while you still have room to move. Your judgment stays in charge. Now, stay in charge. A forecast is an estimate, not a promise, and it only knows what you told it, so garbage in means garbage out. Keep it current, keep your banking details sensible, and treat every forecast as a draft you sanity check. The AI does the arithmetic, your judgment runs the business. The honest watchouts, and because I promised no hype, the honest watchouts, it is an estimate, not a guarantee. Bad numbers give a bad forecast, update it as reality changes, or it quietly goes stale, and keep banking details sensible. A simple way to start. Want to try it today? Keep it small. Open a note and write 3 things: your bank balance now, the money you expect in over the next 10 weeks, and the money going out. Hand that to the AI and ask for a simple week-by-week forecast with a running balance. That rough draft already shows more than the balance ever did. To pull it together, Level 0 watches and hopes, then gets ambushed. Level 1 gives AI 4 things: your opening balance, money in, money out, and one-offs, and gets back a simple forecast with a running balance week by week. You spot the lean week early, and you act, chase, delay, or buffer while it is still easy. See the problem coming, and it stops being an emergency. If you are tired of getting ambushed by tight month, this is the habit that turns cash from a worry into something you stay ahead of. We made a free step-by-step course that walks you from Level 0 to Level 1 in plain language, showing you how to run an AI assistant on your own computer with your own numbers. Head to aifirstasia.com/level1 and take the free course. And if you want more practical AI for SME owners, honest and no hype, subscribe.